Class 1 Chapter 14, E-Information and Distribution Systems Introduction. Hospitality e-commerce consists of transactions and interactions between the business and the customers, guests, employees, and other businesses. People in the industry recognize that our business-to-customer transactions are personal and intimate, which somewhat limits this aspect of e-commerce in the hospitality industry. These limitations, however, do not apply to the information and distribution systems that help us enhance productivity in our business. This chapter focuses on applications of information and distribution systems that provide interfaces to each of the hospitality business functions. The transaction processes that occur in the hospitality industry, such as order placement and payment, are pretty much the same in all industries. The face-to-face interactions between hospitality staff members and guests and clients constitute the core product of our business. Information and distribution systems use technology to provide communication among interdependent operating units. This permits the staff members to focus on the core competencies of creating memorable experiences for the guests of our hotels, restaurants, recreational facilities, entertainment venues, and travel companies. Hospitality and tourism business functions. Hospitality and tourism operations are complex because of the need to manage every moment that constitutes the guest experience. Information and distribution brings together all the business functions that contribute to the operation of successful hospitality and tourism organizations. The business functions of hospitality and tourism organizations include marketing, human resources management, accounting and operations. The productivity process. The productivity model for hospitality and tourism organizations consists of inputs, transformation processes, and outputs. Another term for inputs is resources, since inputs include material, financial, and human resources. Resources are the people and the things required to produce a product or service. The hospitality industry falls within the mixed-use classification, since all our organizations primarily provide intimate services but also produce their own products. Note that technology is also included in our list of resources. Today, technology is a resource that serves as an important input for hospitality organizations to enhance productivity, competitive posture, and service quality. Hospitality organizations now include information systems and technology as part of the strategic corporate direction for each firm. The emergence of Chief Information Officers, CIOs, as members of senior management teams demonstrates the importance of technology in enhancing productivity processes. The shareholders of the organization provide financing to purchase resources that are used to generate products and services in hospitality organizations. These shareholders expect a return on investment from the profits that are created through organizational outputs. The transformation process includes all systems that are used to convert resources into outputs, products and services. Outputs are measured in terms of quantity and quality. Quantity measures focus on sales volumes, which equate into revenues. Hospitality and tourism business functions. The difference between revenues and expenses, resource and transformation costs, is profit. The profits that are generated from outputs are used to reimburse the shareholders for their investments in resource acquisition. Quality measures equate to the value of the products and services that are produced. The value perception lies solely with the customers, clients and guests of the hospitality organization. As the value perception increases, the sales price per unit also increases, and this in turn increases both revenues and profits. An example of value perception is the case of Ritz-Carlton hotel chain, which has twice earned the prestigious Malcolm Baldrige Award for Quality Excellence. Company executives provide the primary source of transient guest room business for Ritz-Carlton hotels. These individuals realize the value of the Baldrige Award, which makes them willing to pay higher room rates for each visit to a Ritz-Carlton property. The average daily rate, ADR, for guest rooms increased significantly after Ritz-Carlton won the award. Higher ADR generates increased room revenues. If costs remain constant, a higher ADR also will result in more profits, which will increase the ROI for shareholders. Historically, we have managed the productivity model in hospitality organizations manually. Today, however, newer technologies permit hospitality managers to improve and automate the interfaces among resource allocation, transformation systems, and output generation. Stakeholder groups. There are 4 basic stakeholder groups in a typical hospitality and tourism organization: guests, customers/clients, employees, shareholders, and the community, suppliers, neighbors, industry colleagues, society, etc. The shareholders invest capital finances to fund the acquisition of resources used to produce products and services. The expectation of this group is to recover the initial investment plus additional remuneration based on the profits of the company. Employees are human resources that convert material and information resources into outputs through the transformation process of the productivity model. Suppliers are part of the community stakeholder group that provides resources such as equipment, supplies, and raw materials for employees to convert into hospitality-related products and services. The guests or the clients are the recipients of the outputs produced by the company employees. The expectation of this group is to enjoy quality hospitality experiences. The perceived guest value of the services rendered by a hospitality enterprise drives the pricing of that firm's outputs. E-business processes. There is a new model for the information distribution processes that supports hospitality and tourism organizations. The key feature of this business process is the design of cross-functional information systems that handle multiple business functions. The 2 processes discussed in this lesson are supply chain management and enterprise resource planning, which are used to facilitate front-end and back-end electronic commerce, e-commerce, and internal employee application interfaces. Supply chain management and enterprise resource planning. Supply chain management, SCM, is a system of information interfaces with sources of supply for material resources. Enterprise resource planning, ERP, is the overall information system used to maximize resource utilization in the transformation process and manage output generation. Hospitality e-commerce is the use of electronic media for transactions and interactions among guests/clients, employees, and other business enterprises. Employee application interfaces, EIs, are B2E information systems that are used to maximize employee productivity. Marketing support technologies. The business function of marketing is concerned with the planning, promotion, and sales of existing or new products in new or current markets. The Internet has made interactive marketing a common feature in business enterprises, including the manufacturing, for example chef producing food, and service providers, service staff. Therefore, one could say that this is a mixed-function industry from a business administration perspective. Salesforce automation provides access to databases and transaction processing from remote location by members of the sales force that enhance the efficiency and effectiveness of product distribution. Sales and customer relationship management provides analysis and reports of product distribution. The Internet provides enhancements to advertising, promotion, and target marketing efforts. Market research and forecasting are assisted by data mining and analysis. Collectively these functions are known as customer relationship management, CRM, systems. A holistic system of advertising, promotion, target marketing, market research, and forecasting using electronic data mining and analysis to generate long-term guest/customer loyalty. There are internal and external customers in hospitality organizations. External customers consist of guests, passengers, and clients. Internal customers are employees who serve those people, hence they are customers of the support staff. In turn, the support staff use information systems to do their jobs, which makes them internal customers of the information technology staff. Thus everyone is a customer. E-business processes.